How much exposure is Nvidia going to have going forward?
Well, I think it's very dynamic. Right now, they have 5%, as the CEO said on the conference call yesterday. In fiscal year 2023 was 20%. So there's a sharp drop in the direct exposure to the China market. However, there are offshore data centers owned by Chinese or Chinese entities that use Nvidia chips. So those would be the markets in Singapore, markets of Middle East. So if you combine all those, I would say that's probably add up to 15-20% of the Nvidia AI chip exposure. So depending on Biden administration's approval, but China is expecting the shipment of H20, which is a dumbed down version of the H100 AI chip shipment in second quarter. But then again, it really depends on the administration in the U.S.
Yeah.
There's absolutely a shortage of equivalent of the AI GPU chips in China, even though there are attempts to catch up. But it's such a long and a complex supply chain. It's not something, it's not writing a code. It's not software, which China is very good at.
So how quickly, therefore, do you think, Junheng, but much has been said that if we do indeed force US companies to exit their exposure to China, ultimately we're just fast-tracking the supply chain, the internal supply chain of China. Do you believe that? Or ultimately, does Jensen, as he seems to still say, want to still be winning in China? He still seems to think that there is a place for his company in China.
Well, I mean, there's short-term, there's long-term. Short-term, there's no equivalent of similar technology, architecture, and production capacity, which is really important. As we've seen, this is a company in operation for 30 years. It went through a very rich history of ups and downs. And the A100, which is the first dominating AI GPU parallel computing chip that was launched 2 years ago, it takes a couple of years to figure out the Cobo's production capacity. And even today, demand far exceeds the supply, right? So, I mean, it is a very complex, it's a hardware company predominantly as of today. And the supply chain is very long, and it's primarily in Taiwan and across Asia. So it's going to take a very, very long time for Huawei to figure out where to source its CapEx equipment, where to source the packaging and testing, qualification, etc. So I mean, I would think 5 to 10 years, and so till then, there's enough room for Nvidia to ship its legacy chips to China, just get it going, and for companies to figure out how to run their kind of lower version of AI computing.
Junheng, I'm interested in your perspective on the total addressable market here, because AMD had put out this $400 billion figure, and then Jensen just saw that and raised the bar significantly, saying it's $1 trillion. Where do you stand on TAM when it comes to these sorts of chips?
Well, I think it's so early on the adoption, it's kind of like irrelevant question. So annually, globally, there are about like 13, 14 server shipment, and currently AI attach rate is about 4%, right? So I mean, really depending on what you think, the AI attach rate should be in a normalized circumstance. But right now, I mean, no one knows. I mean, even assuming what Lisa assumed for, her number is 400 billion. And let's assume Nvidia takes 60 or 70% of that AI chip market, and times it's normalized, let's say normalize the net operating margin of 40% versus today 50%, because they have such a bargaining power to its customers because of a shortage of supply and product mix, and that gives you 300 billion run rate of net profit annually, and times whichever multiple you want to put it. You can argue it's hardware, and it's growing so fast, it's on way becoming the industry gold standard. So you put 25 times PE on a normalized demand cycle, so that gives you about like a 3 trillion market cap. Wow. So versus today, I guess it's 1.72 trillion. So we are looking at pretty close to doubling, in the next few years. It could be bigger than that because Lisa Su's number can be too low. Jensen Huang's number could be closer to reality, but just no one knows. It really depends on the end market application development. But one thing I want to say is, look at this quarter's gross margin, 77%. That's really, really rare. The only company that I can think of a gross margin closer to that is Hermes, which tells me that this is a story that demand far exceeds supply, and the company has so much bargaining power to its suppliers, and there's tremendous operating and economy of scale.